Welcome to the end of day review for Wednesday, the 20th of December 2023. Starting off with the economic calendar, there was one significant red folder news event at Frankfurt Open with regards to the British pound, and then later on in the day during New York session we had red folder news. However, this isn't as significant as CPI. In terms of trading CPI, we can't have trades open beforehand and we can't allow CPI to trigger any entries. We simply have to wait for the news release and then fade the news release according to what what the result is. In terms of what this actually meant for our trading is when Frankfurt opened, we got the CPI news release and it was negative for GBP. This essentially suggested that the entire daily direction was likely to be bearish for the day, and then this was a bit of an issue for us because in terms of our technical analysis, our primary premise was to long simply on the fact that whilst we didn't have 4H pro-trend OBs to support what this was reacting to, based on substructure, we could actually validate this pro-trend primary leg when the CPB change of character level was body broken, validating this primary leg and giving us areas within this leg to look to continue alongside targeting ERL. However, upon the GBP news release, what you can see is that we actually plummeted to the downside as anticipated given the result of the news release. However, the problem is that the news release didn't actually align to our technical analysis bias, which is primarily too long, given that there are no proper 4H OBs that are clear and decisive to actually conclude that the pullback phase is at play, because the pullback phase would validate that we could actually short. As it stands, we can only long for the day, and thus why I'm saying that the news release was a bit of an issue for us. Having said that, and the news actually released, we couldn't do anything for majority of the London session and New York session until the CB consumer confidence news that came out 2 hours into the New York session. Our best bet here was to see that the USD news was negative, and if that was negative, then we could anticipate that GBP USD would move to the upside. However, as you can see, the news is positive, suggesting further further GU movement to the downside, which essentially meant that we were out of luck in terms of actually trading longs for the day. And yeah, there's nothing further to be said for this EOD. It's essentially going to be quite a quick EOD for today, because there is simply simply no support for actually trading long for the day. The one complication that I did face in today was the fact that we did have this 4H validated pro-trend primary leg, and while price is pulling back all the way down to this extreme, it was quite difficult to determine, okay, can we actually build a secondary leg based on the reaction to either these 4H OB areas or actually precise 15-minute OBs. And the conclusion I reached was that secondary OBs don't necessarily make sense, at least not until one of two things happen. Option one is the fib becomes invalid because we actually break below the previous high or low of the day, and in which case, a secondary leg in this sort of form does indeed make sense. Or the next option being that we actually wick below the primary leg and create a new primary leg on the 15-minute off the back of the 4H actually validating the primary leg, and this level not being body broken on the 4H. So I just wanted to mention that because that's something I needed to actually work through today. These scenarios aren't that common and happen every now and again, so it's just important to know how you're going to approach it and to be confident in that approach. Other than that, that's the end of day review for today, and we'll chat again tomorrow for the London outlook.